My name is Flash Isaac, and I'm a teacher from the future. When I was much younger, I saw thousands and thousands of people fail Jamb and unable to gain admission. This made me travel in time. Now I am back with the Flashlearners Jamb app and a series on YouTube tagged 120 Days to Jamb. My mission is to help you blast Jamb and as well get justice for everyone who Jamb has served breakfast. We are welcome to episode number 37 of the 120 Days to Jamb Commerce with Flash Isaac. In this episode, we shall be looking at terms used in quoting price in international trading. Now, if you are discussing price or you are talking about price or about money transaction in international trade, there are certain terms you use. For example, when it is seasonal period like Christmas, New Year, Easter, you cannot say, come and do Easter business with us, we'll give you discount. No. Although that is what you imply, you simply say seasonal discount. Seasonal discount. When someone hears seasonal discount, the person automatically knows that we are in festive period and this person is trying to reduce prices so that people will buy more during this festive period. So that is what we mean by terms, a name for particular stuff. Now, carriage paid is a terms of quoting price in international trading, which means that the seller will deliver the goods to the buyer at the agreed time. And when the goods arrive, the buyer doesn't need to pay any extra charge. No, you are not paying any extra money, just to show that we will get the goods to you at the time we agreed. So just come, take the goods. You are not paying anything. Carriage forward, unlike carriage paid, is a term of quoting price, which means the goods will be delivered, but you've not paid for transport. So every other thing taken care of, but there is exclusion of transportation. When the goods are being shipped to you, you pay the transport. So transport is not included. But here, you are not paying additional charge. While free on board means all the shipping fee, the loading, offloading, all the necessary fees on this particular product has been paid for. So you don't need to pay any other thing. The loading, offloading, the movement, the carriage, everything is being settled. That is what the term free on board refers to. Free alongside ship, FAS, is a term of quoting price in international trade, which means all the charges required to ship the goods to where the ship is has been paid. But from that point of shipping to where you are staying, you need to pay for that. So everything has been paid, they've taken the goods to the port. So every other thing from there is left for you. You are going to pay that. And we have free on rail. Free on rail. Free on rail simply is a document which shows that the price quoted is for the goods to be carried from every other part or from the manufacturer to the railway line. Now, any other thing from that railway, the insurance, the transportation from that rail to wherever you are taking the goods to, you are going to bear that. So all these are actually quotation prices. Free on board, taken care of, free alongside ship, shows that the price we told you, the amount we discussed, is to take these goods to the ship. From there, left for you. Free on rail means the price we gave you, the quotation we gave you, covers every cost to take the goods to the railway line or to the rail port. But from there, you are going to take care of every other thing, starting from there to where you are going. Cost, insurance and freight is a quotation, or it shows that the amount we agreed for these goods is the cost of the product. You've paid for the goods. Now, you've covered the insurance, you've paid for the transportation up to the port, your own port. Let's say There's country A, there's country B. You paid for cost, the insurance, and for the shipping. Now, by the time they are able to ship it to the port of your own country, so from that port to your house to every other part, selling, everything is now left for you. They've done all their best. At least they've tried for you. This one is just to ship, this one is to the railway line, at least here, up to your own port. So you can take care of that from there. And cash on delivery is a price quotation, which shows that you've not paid for cash on delivery, rather, which means that you've not paid for this product. But immediately they ship it to you, immediately you receive it, that is when you pay. So most businesses, they offer cash on delivery. When you get it, you pay. You pay for what you got. Now, cash with order is somehow opposite of cash on delivery. Cash with order means as you are placing order for the goods, you pay immediately. Whether you've seen the product or you've not seen it, you are definitely going to pay. That is cash with order. Now look at this auction sale. Auction sale is a type of sale or a term used in quoting price where the highest bidder takes or where bidding is carried out. Now, you see somebody selling phone, iPhone SS Max. The person does not put price. The person says bid. Now, and the person says this phone will be available for 24 hours. You see, if the phone is neat, you see that people start bidding. The first person will say, I will pay $2 for this phone. Then someone else sees it. Someone else says, no, I will pay $4. The next person says, I will pay $5. The next person says, I will pay $50. Now, as it approaches 24 hours, you see people begin to bid. You see that maybe we have 50 bidders. People that are interested. You know the time will be counting down. Once you have 1 hour remaining, you see many persons. This one will say, I will pay $60. This one will say, no. One person just takes it to $100. Another person say, no. $150. People begin to bid. Now, if it remains 0 seconds, maybe the time has elapsed, they will now look at it. Who is this person? Who is the highest bidder? So if the highest bidder is $150, it means the iPhone SS Max automatically goes to this person. So no price on the product. You just start bidding and bidding and bidding. Then Franco means the cost being quoted involve the cost of insurance, the goods, and the transportation up to the buyer's warehouse. So you pay for everything. They ship the goods to your warehouse. They've tried. So from warehouse to whatever you need to do with the goods or sell, that one concerns you. But they're taking the goods to your warehouse already. S warehouse is also called S works. This means that the buyer will bear the cost of taking the goods right from the seller's warehouse to wherever he's taking it to. But from the warehouse of the seller, you are responsible for all the costs. You pay for everything. You pay the buyer, every other thing concerns you. If you want to take it to anywhere you wish to take it to, shipping fee, everything is your own business. And finally, free on K, FOQ. Now, K is usually referred to an area where ships are loaded, unloaded, and repaired. So, this means they take the goods to the K or to the wharf where these things are being loaded. So, you bear the cost from that point to your house or to wherever you are taking it to. So, what have we been able to look at? We've been able to look at terms of quoting price in international trade. We are quoting price. So, this price covers this, it does not cover that. If we say this, it means that the price covers this, it does not cover that. If we say that, it means the price covers everything. So, with this, we come to the end of purchase and sales of goods and the end of terms of quoting price. I hope you found at least one thing helpful in this video. If so, let me know how you feel using the comment box. Don't forget to share, don't forget to subscribe. and visit flashlearners.com to get the Flashlearners Jamb application. It will help you score extremely high in your examination. There are various versions of the app. See you in the next episode.